Hello, good morning and welcome to ET Now's the newspaper show with me, Varun Hirimat. For the next half an hour, we'll be walking you through the headlines from the Economic Times and the Times of India. But before we do that, it's important to let you know that the newspapers are completely safe. Many people have now begun to reorder newspapers at their residences. So if you are interested, wantmypaper.com is where you need to go. I repeat again, wantmypaper.com, where you can explore all the options available for the delivery of newspapers to your residence. So do have a look. With that being said, let's get a move on with the top 10 stories of this morning, beginning with the fact that the economy is set for a strong farm-led revival, and that's word coming from the FM. We're almost there on a quick trade deal with the US, says Goyal. Non-AAA NBFCs queue up for liquidity schemes. Consumer electronic companies advancing output ramp up. Retail auto sales to improve in June. Amazon Prime Day sale early next month. BCCI to see government nod to host IPL in the UAE. Vaccinating India to take at least 2 years, say doctors. 23% in Delhi affected by COVID, says a survey. And the EU mounts $860 billion plan to fight the recession. So those were your Economic Times top 10 stories. We're now going to bifurcate them for you, corporate versus market. Let's begin with corporate. Malls get back on their feet in Unlock 2.0. Airtel renews network ops deal with Ericsson. Vodafone Idea annual AGR hit seen at over 6,200 crores. Google to seek CCI nod for stake buy in Jio. And IPL may bring festive cheer to ad spends. Those were the corporate stories. Let's now move on to market. Higher provisions drag Axis Q1 profit. GSK deal helps HUL post a 4% sales growth in Q1. SBI card passed IPO price after Q1 beats street estimates. Bajaj Finance net slumps 19% to 962 crore in Q1. CSB looking to buy an old private bank. So those were the headlines for this morning, and it's quite an action-packed lineup. There's a lot of stories to discuss. So let's get a move on. Page 1 of the Economic Times. Finance Minister Nirmala Sitharaman yesterday said that the economy is set for revival. She also said that India is opening all sectors to investment, like we've seen with coal. She said that the early announced economic measures to cope with COVID are now yielding results. So, I can't say it enough and we can't say it enough. Pump priming the economy is everyone's top agenda. And the FM coming forward yesterday and saying that what's already been done seems to be yielding some positive outcomes. And now there will be more such measures implemented. Again, keeping it with page 1 of the Economic Times. The Commerce and Industry Minister Piyush Goyal yesterday said that India is almost there in closing a quick trade deal with the US. Before the free trade agreement, there will be a preferential trade agreement with 50 to 100 products and services. With respect to the FTA, Minister Goyal said that there is a deal in negotiations due to the US presidential elections being just around the corner. Okay, next story. Again, page 1 of the Economic Times. Gujarat and MP set an example by making an exemption for newer businesses from 2 key labour laws. New businesses will be exempted to provisions for 1,000 days from the Factories Act and Industrial Disputes Act. Excuse me. So we heard about the labour law tweaking that's going to be happening, and it seems that it's already underway. Okay, we're now going to turn over to page 2 of the Economic Times. as a clutch of non-AAA rated firms has applied for nearly half the amount set aside for non-bank lenders under the government's special liquidity program. This program has raised hopes that the crisis-ridden NBFC industry may see cost of funds coming down. Poonam's joining in with more. Good morning, Poonam. Welcome to the show. Could you please explain us the nitty-gritties of this story?
Sure. Good morning, Varun. In fact, yes, this is a good story that is there in Economic Times. What the story says is that the special liquidity scheme worth 30,000 crore, which the finance minister had announced in order to help the NBFCs. Now, nearly half of that entire scheme has seen interest from AAA rated, from the non-AAA rated NBFCs. They have queued up for nearly around 15,000 crore of the government's special liquidity scheme in order to help them raise, get their borrowings at a better cost. In fact, these NBFCs are on the likes of Pyramid Capital, KKR India, India Bulls, Consumer Finance, IIFL Home Finance, Tata Motors. These are the top names among the non-finance NBFCs that have applied for loans worth nearly 15,000 crore. To note that the scheme also has a residual maturity of 3 months from the date of disbursement. The scheme also ensures that we are seeing slightly lower cost for these NBFCs. These NBFCs have been wanting to raise money at a better cost of funds, and more importantly, they have wanted to raise liquidity, and hence access to funds is what they have received. What the article also mentions that we are seeing slightly lower cost of funds in the system. Yield differential between AA rated 3-year corporate bonds and similar maturity G-Secs has narrowed to 109 bips since May 22, and yield differential between AAA rated 3-year corporate bonds and similar maturity G-Secs has contracted by 116 bips. This shows the borrowing cost is coming down slightly for the corporates. Now, we will have to really go ahead and see as to which are the other NBFCs which would be applying for this scheme. But as of now, it seems that the non-AAA rated NBFCs are seeing much demand for this special liquidity scheme by the government.
Thanks for that, Poonam. Really heartening to know that we're also looking at the non-AAA band, because let's remember TLTRO 1.0, TLTRO 2.0, the credit is always mopped up by the highly rated corporates. And what about the guys lower down who are having genuine business troubles, and they tend to be more levered? So it's really heartening to know that the government is focusing on making sure they get capital, and that should lift sentiment as well as operations quite a bit. But thanks for that, Poonam. Very interesting update. Let's now move forward. Again, page 2 of the Economic Times, and Vinny is going to walk us through this story, but let me give you guys a little intro. Smartphones and consumer electronic manufacturers such as LG, Sony, Xiaomi, Vivo, Realme and Panasonic are advancing festive season production plans by a month. This will help lift output to last year's levels or even more. So Vinny is now with us. Vinny, what are you picking up from this article?
So Varun, like we know, post the lockdown, we have seen a lot of pent-up demand for these consumer electronic items as well as phones as well. Now what these companies are saying that, they've seen so much of pent-up demand that they have to scale up their business, scale up the production levels to meet this extra demand that they are seeing. Now, they are saying that they are seeing such a high demand in the past 2 months that normally what production they would start for festive sales a couple of months later, they are planning to start that level of production even now. And festive season is a really important season for these consumer electronics as well as phone companies, and we see a lot of buying over there for these products, and it's one of the important quarters. So now, if this is the high demand they're seeing over here, they are planning to ramp up their production, build up the inventory, starting from as soon as next month only, and they will continue, to increase their production, because even despite that we are seeing that localized lockdown in the country in certain areas, this pent-up demand and this high demand has continued. Now, if we talk about specifically Dixon, who's a contract manufacturer for Xiaomi, Samsung as well as Panasonic, they said that they will expand their capacity for washing machine and televisions by up to 40% due to the big order clients they've seen and a high demand for this. So they are also increasing their production. The industry is especially seeing a rural demand, increase in rural demand. So they are saying that, companies have reversed their pay cuts, they are giving salary bonuses, and the festive season is giving it some sort of a cheer ahead of the festive season as well. So that is showing positive signs. Even Panasonic's Manish Sharma did say that the industry lost around 21% of their revenue during the lockdown, but seems like due to the rise in demand, it is indicating that this will be recovered very soon. The loss will be recovered, and by festive season will be able to recover the full loss which they have made. So overall, if I just take you all through quickly the numbers of sales growth that we have seen, refrigerators up by 40% in the month of June, washing machine is up by 45% in the month of June, microwave ovens are also up by 50 to 55%, television sets are up by 55 to 65%, grooming products are up by 500% in terms of sales growth in the month of June. So surely, companies are going to capture this demand. They're seeing a lot of high demand, and they are planning to expand their capacity to over and above the last year's festive season levels as well.
Okay, super, Vinny. So a lot of pent-up demand, kind of like talk building up, which seems to be releasing in one way or another, and we are going to see some enhanced production from consumer-facing companies on account of that. We also heard Britannia in a different light say that they were expediting the capex of 5 new facilities to meet increased demand. So it's happening across the board, and thanks, Vinny, for bringing us that important update. Let's now switch gears to pharma a little bit. Sorry, FMCG again, HUL, but GSK is involved this time. And after talking consumption, we moved to one of the biggest consumers, which is HUL. They came out with their numbers yesterday, and in the first quarter, they saw a surge in their sales growth on the back of the GSK acquisition. So that's something to keep in mind, that is what's kind of propelling the growth. It's not happening all organically. Nearly 80% of the company's portfolio themed on health, hygiene and nutrition has grown by 6% over a year ago. While discretionary segment has been hit hard by the COVID, HUL has said that September quarter would be able to give a better picture of what the demand is kind of stabilizing at. So that's some key commentary to look out for as far as Hindustan Unilever is concerned. Let's now also bring you a quote from the chairman of HUL, given that we were just talking about it. He says that if there are not many disruptions like vertical lockdowns that are happening in different parts of the country today, if they don't remain over an extended period of time, then September quarter would be much better picture of the underlying demand. So that's kind of just reiterating what I just said. He wants to wait a bit before he draws any conclusion about where the demand levels are stabilizing at. Right now, everyone's looking at a huge jump because we've just come out of COVID. So all the numbers are looking like sequentially, they're really jumping up. But let's remember, a lot of these numbers haven't even crept up to official pre-COVID levels yet. So let's not get too excited. Let's wait for a little more time. And then we can decide where the economy is heading in terms of mass demand for FMCG products. Okay, we're now going to be talking about Axis Bank, which put out its numbers yesterday. Now let me bring you guys the key positives of what happened in that result, right? The key positives were that credit growth slowed less than expected. So the NII, which is your net interest income, held up at 6,800 crores, which is a similar figure to what we saw last quarter. In fact, it improved by around, I think, 4%, 6,985 versus 6,800. Now the profit level, last quarter, we saw a huge loss because the COVID provision was 3,000 crore and the total provision was 7,700 crore. So we at ET now had a poll projection of 1,200 crores for the profit level. It came in at 1,100 crores. But then our provision estimate was 4,000 crore and provision came in at around 4,200 crore. So if you adjust for that, it's not really a miss on the profit front. Another key positive from the Axis Bank result, your other income, which usually comes in 3,800 crores or 4,200 crores, came in at 2,500 crores. This is not an Axis unique situation. This happened at HDFC as well. Branches were shut. Traditional banking services were lower. So your fee income, other charges, and that you would have been doing in your usual course of business were not there in Q1, which is why your other income has been lower for all banks. But despite this, you're still maintaining profitability, and that means that the rest of the business has really picked up and become a lot more profitable, because if you add that other income back or just normalize it to regular levels, the profit could have been higher by around 1,000 crore. So that's another key thing that stood out for me personally. NIM NIMs came in a tad bit disappointing, shy of the estimate of 3.5 at around 3.4. But no one's going to really care about that, because the headline figure said by Amitabh Chaudhary himself, the first question when the presser opened, was that the moratorium levels have fallen to 9.7% from their earlier 26 to 28%. Now the street obviously got very excited by this. HDFC was also 9%. So they started putting Axis in the same club. What later happened in the con call, which was done by analysts, you realize that the moratorium figure of 9.7% is not actually across the entire loan book. They've bifurcated moratorium 1.0 and 2.0, and there's some overlap. And based on the 2.0 figures, the percentage is 9.7. But from the earlier moratorium book, there are payments which are still pending. So this is nothing to worry about, because what we have to understand is moratorium was a concept that was developed in hastiness because of what was happening. So there was, RBI to quickly implement. So every bank is currently working with its own definition of moratorium. We don't know if someone makes a payment in April but they don't pay in May or June, are they out of moratorium? If they make a payment in June but they didn't pay in April and May, are they out of moratorium? Banks aren't disclosing that. Much to everyone's surprise, the best and most transparent bank is Federal. They're the only people who said the gross number of people opting for moratorium is X, and now the net number is X, and that's how gross minus net is how many people have left moratorium. And these are people, mind you, who have made all three payments, April, May and June, not just one installment. So there's a lot of grey area here, but instead of focusing on that, what you have to focus on that is that these are all RBI governed entities. They're working with the highest corporate governance, and they're not going to come out and say something which is not true. So I would take Amitabh Chaudhary's 9.7% for face value, but based on further probing in the con call yesterday, it was understood that the moratorium figure across the loan book might actually be a little bit higher. So those were the key takeaways for me from the Axis Bank result yesterday. It'll be interesting to see how that counter opens up this morning. Let's get you a quote from Amitabh Chaudhary himself before we switch completely out of Axis. We remain cautious. We remain conservative. We believe that this crisis is yet to play out, but we will capitalize on any opportunities this crisis could present to us. So that's what he had to say. They've just done a huge capital raise. Their capital adequacy is more than sufficient. So they're ready to tackle any kind of growth, stress, or anything that's thrown to them. And ultimately, being now the second largest bank in IMPS and UPI, their AMC business is growing fastest in the industry at 20% YOY. It's a really good show from them. Okay, the next one, page 13 of the Times of India. You have Bajaj Finance, and after being the company patriarch for over 33 years, Rahul Bajaj announced his retirement as the chairman of Bajaj Finance. He's all set to hand over the reins of the company to his son Sanjeev Bajaj. Though Rahul Bajaj is stepping down, he will continue to serve as a non-executive and non-independent director. So that's some news coming out of there. Let's now switch back to page 1 of the Economic Times as we wind down to the end. According to this ET report, medical experts have tempered expectations from Oxford's vaccine candidate. Healthcare specialists said that even in a best-case scenario, it would take at least 2 years to vaccinate 60 to 70% of the population to ensure herd immunity. So that's just a different perspective coming in for you on the vaccine. Let's quickly also get you the top 5 headlines from the Times of India. Mumbai COVID positivity rate falls to 20%. India records over 6 lakh cases in July so far. Government warns on the use of N95 masks with valves. Bombardier GMR show interest in running trains. And India's hiring sentiment picks up for April to September. With that, We've run to an end of all the individual stories we had to bring you this morning. Before we let you go, as always, ET Now special hearing impaired news segment.